Uh, Yo, what's up, bro? It's Humphrey. How are you?
Good afternoon, Mr. Collins. How you doing?
I'm good. I'm good. I'm good. How is the week been for you? How's the market going so far?
I've been in and out of the market. I've not been trading as much as you.
All right. Uh, you know, coming to we're studying this class. This these tools called derivatives. I wanted to share some information with you to see if you know, or maybe I can give you some light information, and you can see how you can benefit from the derivatives markets. So I want to ask, what do you understand, or have you ever heard of the word or term derivatives?
Uh, I've bought a few stocks here and there, but when it comes to the terms derivatives, I'm a bit lost.
Oh, okay. Well, yeah. I mean, you can say you're not wrong, not right, but I can say derivatives are financial contracts whose value comes from another assets like stocks, commodities, oil, or currencies. We usually call them underlying assets.
Oh, so they're like copies of assets.
Exactly. They derive their value from something else, hence the name derivatives. So let's start with the one popular derivatives that we have. There are four types. So we'll start with one. We have future contracts. Have you ever heard of FCPO or WTI crude oil futures?
I've seen them on trading platforms, but I'm not. I don't really know what they are.
No problem. A future contract is an agreement to buy or sell an asset at a price on a future date. Example, you can have the WTI crude oil futures represent 1,000 barrels of oil, or crude palm oil futures, call them FCPO in Malaysia, can represent 25 tons.
25 tons. That's a huge amount. Why would investors invest in that? Trade in that?
Yeah, great question, bro. Uh, Here we have two things: hedging. Two reasons would be hedging and speculation. The hedges or hedging process, this where producers use futures to protect themselves from price drops. And speculations, traders want to profit from the price movement.
It's not just gambling. The strategy behind it.
Exactly. Futures also use leverage, meaning you only put down a small deposit called margin. A small price change can lead to big profit, or when the price goes down, big losses.
Oh, so the risk is very real.
Yeah, the risk is very real. Now, let's talk about something common for retail traders called structured warrants. Uh, Structured warrants, I can say these are like options, but the ones that are available here in Malaysia.
Yes, I've seen names like PNB, PPP, and Canada 230 all the time. What do they mean?
These are core warrants, okay? They're issued by the investment banks, if you've ever heard of them. Think of a warrant as a ticket that lets you participate in a stock, in stock's price movement for a fraction of a cost. For example, CIMB C28, right, gives exposure to the CIMB group. It might have a ratio of 4-1 conversion ratio, which means four warrants equal the exposure of one share. You get me? It's it has gearing. It has gearing, so if CMB's prices increases, the warrant moves faster. Uh,
Yeah.
Also, vice versa.
what multiplies its gain.
Yes, but it also losses. You can also get losses, and there's catch of another catch, time decay. Every day you hold a warrant, it loses some value because it has an expiry date. Yeah. Hello. Yeah, I can hear you now. Yeah, exactly. Warrants reward correct timing, but punish waiting. So before you jump into trading, you need to understand important ethics and market integrity. Yeah, I do mean scams. Partly yes, but consider this like spoofing, where traders fake orders that manipulate prices and information asymmetry, where investors have a better idea, better data than others. That's why financial education uh, is crucial. You need to know how the system works so that when you enter into the market, you don't get manipulated and you don't take advantage of. Uh, yeah, and that's why investing matters as much as strategy. So now we have covered futures, warrants, leverage, and ethics. Do derivatives still feel intimidating to you? That's the mindset of a smart investor. Remember, knowledge first, risk later. Yeah, and that's the first step toward learning about derivatives, and you can get into deep. You need any knowledge, just let me know. We can get into deep on futures, forwards, swaps, and the options and all that. Right. Have a good day. Okay, thank you.
And